Hi there, welcome to Kneppy Invest and welcome to October 7, 2024. We have about 50 minutes left of trading today. Pretty good day on the markets. A day I expected everything to be absolutely flat. In fact, I thought there was no trading today. I thought the markets would close because it is public holiday in Queensland, also a public holiday in New South Wales. And for some reason, a bad assumption on my part, proving the adage, when you do assume, you make an ass out of you and me. So I'm upholding that particular adage. I made an assumption the markets were closed today. And that was a bad assumption, a wrong assumption. And I do have to give thanks. And the whole reason the markets are open is because it's not a national public holiday. And I actually did not realize that. But in saying that, I do have to give thanks to King Kasuma. ASX did sell open on Monday as it isn't a national holiday. But in saying that, June 10 this year was not a national public holiday, yet the markets were closed. And the reason I know it was not a national public holiday is because it wasn't a public holiday in Queensland and Tasmania. And I think I've made this mistake before. Possibly on June 10, I thought the markets were going to be open, but they were closed. And maybe I've made the mistake this time of year as well. For instance, today is King's birthday in Queensland, but Labor Day in New South Wales. And so it's not a consistent public holiday. So anyway, the markets are open today. Even though the majority of the country has a public holiday, I'm trying to think, if you added up the population of New South Wales and Queensland, is it half of the country? That is interesting. Population of Australia states. Okay, so New South Wales, 7 million, Queensland, 5 million. So we're talking about 11.8 million. And the rest, yes, in fact, more than half of the population is in New South Wales and Queensland. So more than half of the population of Australia has a public holiday today. I am not complaining, however. I'm not complaining that the market is open today, but I do have to give thanks to King Kasuma because I read this particular comment at about 9 o'clock. No, it would have been 8 o'clock local time, assuming the markets were closed today. And the only reason I read the comment was because every so often I do go through, have a look at the comments in case there's any spammers. I do get a few spammers. And as soon as I see spammer, I delete the message. But definitely thank you to King Kasuma. Otherwise, I would have been completely ignorant today. And maybe I wouldn't even have recorded a video. Eventually, I would have discovered the markets was open, but it might have taken me a while because I am in between night shifts. So when I am in between night shifts, I usually go to bed about 9 o'clock. Wake up about 12, 1, and then do stuff. And maybe my ignorance would have flowed through the rest of the day. And then eventually I would have went, what? The market was open today? Wow. Anyway, pretty good day on the markets today. Pretty good. I expected this because of the really good Friday session in the United States, which was led higher. I wonder if it's led higher because there was this nice little article in Trading Economics. US payroll significantly surpassed estimates. The US economy added 254,000 jobs in September 2024, much higher than an upwardly revised 159,000 in August and well above forecast of 140,000, suggesting that the American economy is doing pretty well right now. Now, in the past, they have revised these numbers down, and that has been a problem over the past few months. Oil eases after sharp rise. Japanese shares rally as the yen weakens. And Australia MI inflation gauge stays subdued. Anyway, so pretty good day on the markets today. Really led by small caps and tech, both up by over 1%. Mining, not quite as a good day today, but lithium, an absolutely brilliant day for lithium. And that was fueled by a potential takeover of Rio Tinto, by Rio Tinto of Arcadium. And so you'll notice when we do have a look at the best performing companies on the ASX today, a lot of lithium companies. I'm not sure if lithium prices went on a bit of a run, but I think that was fueled by this potential takeover. And I will discuss this potential takeover focusing on Rio Tinto because this is the time to make these sort of acquisitions at the bottom of the market. Now, I am making an assumption that lithium is at the bottom of the market, or bottom of the cycle, I should say. So this could be a very astute acquisition. Anyway, so the agenda of today's video, go through the best and worst performing indexes. What's the other one? Sectors, companies. Then we'll go through the top 5 stocks of the day. Fairly quiet day on the market today. Not a lot of interesting announcements. But Rio Tinto, Arcadium in the number 1. West African Resources number 2. They'll become fairly obvious when we have a look at their announcement and what's been happening in Burkina Faso. Medicus at number 3. GQG at number 4, they did release the funds under management. And number 5, a company I've never had a look at before, SMI, Santana Mineral, share price up about 12%. And I was a little bit surprised to see the market cap of this company, 500 million. And they have a project in New Zealand. And I was actually thinking, do I know any other miners who have projects in New Zealand? This could be the first one. Maybe I do know a few, but I just ignorant again. Okay, so let's turn our attention to the ASX today, focusing on the sectors and indices first of all. And just by looking at the XGO and XAO, there's been a nice run since about 11:30, fairly flat until then. And in fact, all the indices have gone on a nice little run since then. So who's complaining about the ASX performance today? So sectors, financials had a good day. IT, good day. So I'm assuming banks have had a nice little bounce. Materials, discretionary, energy, all up by over 0.5%. On the flip side, real estate and utilities have had a negative day, alongside telecommunications and healthcare down a little bit, but we'll say that's just flat. So there is a bit of a bifurcation in the markets today. Some really good sectors. Some sectors have performed well. Some sectors have not. And banks, pretty good. In fact, coming in number 1 is the ASX 200 banks at 1 or up by 1.58%. Now let's have a look at the ASX 20, up 0.7%. I have no idea what's happened with iron ore. I'm assuming all the major banks are up. Macquarie Bank is up. I'm not sure how the market would have reacted to Rio Tinto's potential takeover Arcadium. Possibly up, I would assume. So I'm going to say for 15 companies up, 5 down, 13 up, 7 down. And if we have a look at the worst performing company, well, we know Goodman Group's probably down, because real estate's had a bad day. Rio Tinto. So the market has not reacted well. Well, I suppose that's being a little bit over dramatic. It's only down 2%. REA Group down 0.5%. Transurban, Telstra, Woolworths, and Wesfarmers all down. And the best performing companies, Fortescue. So the worst performing company is iron ore. The best performing company is iron ore. And then we have banks, Westpac, NAB, Aristocrat, which is not a bank, ANZ and CBA. And there's also Macquarie Group as well. So possibly banks have had a bit of a dip, and this could be just buying the dip situation. No idea. Anyway, they're still significantly overvalued. Okay, so let's turn our attention to the best and worst performing companies on the ASX today. First of all, we'll have a look at the top gainers. And you'll notice when we list this by market cap, a lot of lithium companies. Even if as we look at this by percentage change, I would assume a lot of lithium companies. Yes, I'm seeing a few lithium companies there. Caloi Metals, never heard of this company. Market cap of 15.4 million. I'm assuming this company must have released something because pretty big turnover. So let's have a look at Caloi Metals. Must be a fairly recent listing, KM1. So if you do see a number, that means the company is probably listed within the last 8 years, maybe. Anyway, share price has been a downtrend. We'll have a look at the chart in a second. And the company did release something today. And they released this at 10:24 a.m., so I would have completely missed this. In fact, I went to bed at about, I'd say about 9:50 a.m., just before the markets opened. Caloi expands Pilbara joint venture with SQM. The market does like this. SQM, isn't that lithium? Isn't that like a Chile lithium company? I could be completely wrong, but for some reason, I'm just thinking SQM is Chile lithium. Let's see if they have an about section. But that's, lithium deposit, lithium occurrences. I just want to confirm SQM is Chile lithium. Now, there's nothing there about SQM. Maybe there's something in the title of the announcement. No, I am almost certain SQM mining is Chile. Chile, there it is. Yep, Chile. Chilean, I think that's how you pronounce it. Chemical company and supplier of plant nutrients, iodine, lithium, and industrial chemicals. So much more diversified than I thought. I just thought it was lithium. And they have doesn't have say mention of valuation, founded 1968. There you go. I learned something. Well, I didn't learn that, just confirmed that SQM is lithium. And what was the mark? What was the ticker code? XKMY? KM1? I can't even talk. And there we have the chart for Halai Metals. Calm down, Michael. You can do this. And this company did list on the ASX at the start of this year. So, yeah, I sometimes whenever I see the number in a ticker of a company, I know it's a recent listing. And again, when I say recent, I mean quite a few years. A little bit of excitement in this company when they did list. Share price actually popped up the first 3 days. Share price got to a high of about 88 cents and has been falling ever since. And this has been a good day for the company and the share price. Some good volume coming in. In fact, if we zoom in, some really big volume compared to what we've been seeing. This is after share price has been in a downtrend. So when you see that really low volume, when share price is in a downtrend, the market's just not interested in the company. And finally, the market is interested in this company. Does not mean share price will go on a run now because there's going to be a lot of resistance moving forward because all the shareholders have bought in the past and they will sell. And we've seen the selling coming in today. Share price did get to a high of 27 cents. Now it's down to below 20 cents. So that's understandable. You're going to see a bit of selling when you see a chart like this. No matter the announcement, you will see a bit of selling. But when you see a lot of buying coming in as well, that's really powerful. And the way you just look at the one-day candlestick to judge the power of an announcement is if it's a solid green candlestick, that shows you power. It's a really good announcement. So not a solid green candlestick today. We saw a solid green candlestick, or this company saw a solid green candlestick on the 16th of May. The next day it went sideways and then a big plunge the following day. So sometimes you have to wait to just confirm whether it is you see any follow-through trading. Now, on that big day in May, there wasn't massive volume. A little bit of a peak in volume, but not massive volume like we're seeing today. Okay, so let's move on to these other companies, Arcadium. So that, along with Rio Tinto, number one stock of the day. Otherwise, Rhythm Biosciences, pretty big turnover for this company. I'm assuming this company is Biosciences, healthcare company. And I'm assuming this company also released something today. And they did. Second generation Colostat multiplex alpha kit outperforms. That's probably the key word there. Outperforms. I won't open up this particular announcement, but the market has liked it for Rhythm Biosciences. So let's just have a look at the chart for this company. Possibly this company could have made it into my top 5 stocks of the day. And I actually do like this chart a little bit more. Now, over the long term, the share price has been in a massive downtrend. In fact, back in 2022, the share price of this company was about $1.50. Now it's 10 cents. So we're talking about, what's that, a 96% drop in share price over a fairly short period of time? Is that right? It's more than 90%. Let's say 95%. Anyway, so the share price in a well-defined downtrend. Now, in saying that, does look like the downtrend is coming to an end. Share price trying to consolidate. In fact, the share price has been going sideways for about 5 to 6 months. And all of a sudden, we've seen a bit of a pop-up today on this news, a bit of volume coming in. And the share price is at least a 6-month high. Yeah, or almost a 6-month high. In fact, the share price, last time it was this level was back in February. Now, we have seen a little bit of selling. Share price to get to about 14 cents. So again, not the most powerful candlestick or one day or one period candlestick, because we have seen a little bit of selling, but it's understandable why we've seen selling, because there's still probably a few shareholders who still own shares in this company who bought in much higher prices, and they saw the share price pop up today and thought, now's my opportunity to sell out of this dog stock. And it might be a dog stock. I don't know anything about Rhythm Biosciences. And then I'm assuming some of these other companies at the top of the percentage change list are lithium companies. We know Gallon is because it's got it in its name. Wildcat Resources, baby. And there's another one, Piedmont Lithium, up 21%. First Lithium, Liontown Resources. I'm assuming Patagonia Lithium is Lithium 2 as well, although turnover is fairly low. G11 Resources. Now let's have a look by market cap. I'm wondering if this is going to be just full of lithium companies. So number one, Lithium, Liontown, Arcadium Lithium, Vulcan Energy Lithium, Ioneer. I'm not sure what Ioneer does, but it's up 9.76%. BrainChip, Santana Minerals, that is in my top 5 stocks today, so we'll talk about that company later in the video. So Weebit Nano and BrainChip rallying hard today. Sayona, Lithium, Sierra Resources, Graphite, Patriot Metals, I'm assuming that's lithium, Core Lithium, EML Payments, bit of a rally for that company. Just going to see if email payments did release anything today. And the main reason behind that is because the share price has been in a bit of funk lately. Nothing. I think this is just the company is, or the share price is oversold, and this could be just a bit of a bounce. Yeah, bit of a funk. Share price dropped all the way down to 60 cents and just an okay one-day rally. Although not long ago, we had a nice little rally. On the 26th of September, share price rallied 6.4%. Not sure why there's a bit of selling for this company. It's getting to the point where it's looking interesting value, but that's just me. Okay, now let's look at the worst performing companies or the top losers on the ASX today. Not surprising to see West African Resources down 19%. I do think the market is overreacting. I'll talk about why the market might be overreacting, but also I can understand why the share price is down 19%. But I'll talk about West African Resources when we get to the number 2 stock of the day. Otherwise, no real theme here. Apart from all the companies apart from West African Resources, all have a low markup. So fairly liquidly traded, I would assume. Can Group, I did notice Can Group released something today. Let's have a look. Can Group. What did they release? Share price down almost 15%. Oh, they did looks like they've done a capital raising. Non-renounceable entitlement offer. Okay, we can move on. I don't really focus on capital raisings unless there's something interesting there. And yeah, there's just nothing much to talk about when it comes to the top losers. And that's a good thing. I like that. Not much to talk about. Now let's have a look by market cap. West African Resources, EZZ Life Sciences up and down like a yo-yo, Synlait Milk, AFT Pharmaceuticals, very low turnover. So nothing really to talk about anything there. In fact, really low turnover for most companies. And even some of these bigger companies, the share price is down a little bit, but not all that much. And yeah, there's nothing here. Nothing really to talk about when it comes to the top losers today. Now let's turn our attention to the stocks of the day. And first of all, the company I don't know anything about, Santana Minerals. I wonder if this was sort of like a tribute to Santana the musician. Is it a guitar player, I think? Santana, guitar player? Santana, musician? Carlos Santana, American guitarist. Yeah, I was right. Founding member of the rock band Santana. There you go. Anyway, so the market, share price is 223, by the way. The markup of this company was a little bit more than I assumed. It was a ticker code SM1. No, SMI. Synlait Milk is SM1. And the markup of this company is $470 million. So I saw a fast track approval received, which is interesting because that's the sort of announcement you might see from a biopharmaceutical company talking about fast tracking testing, whatever, of drugs, that sort of thing. Fast track approval. That did intrigue me when I saw it. I went, what does that mean for a mining company? It was pretty obvious. Santana Minerals is a mining company. Then I opened it up and I went, oh, this is New Zealand based. Their projects are New Zealand. And New Zealand government has just fast-tracked their project. So Santana Minerals is pleased to announce. Funny enough, the word please sometimes is used when a company releases a negative announcement. I've seen that a few times. And each and every time I thought, that's not the right use of the word please. You should not be pleased releasing this announcement. Anyway, I'm off track a little bit. So the company is pleased to announce that its Bendigo Ophir Gold Project in Central Otago, New Zealand, has been officially designated as a fast track project under Schedule 2 of the Coalition Government's Fast Track Approvals Bill. I'm not sure what that all means. I'm not that interested in that particular announcement to delve deeply into it, but this is obviously pretty good news. And the CEO mentions, with gold prices soaring above 4,300 New Zealand dollars an ounce, we couldn't be more pleased. And the market's pleased as well. So let's have a look at the chart. And the first time I've had a look at this company, I think. Now, this company might be in my gold. Let's have a look. Do I have this in my watch list? I'm assuming I do because the chart looks pretty good. I have this in my high volume spec and my buy bias trade. So even though I've mentioned I've never had a look at this company before, I've had a look at the chart, and the chart has impressed me. And sometimes I think that's the sort of proof that on occasion I do disassociate the company from the chart. So I just look at the little chart. This is pretty good. And that does eliminate any bias. This chart looks absolutely brilliant. And it's been looking pretty good since late last year when the share price was about 60 to 70 cents. Now the share price is $2.23. And a few negative weeks in a row, and this is pretty nice bounce. Anyway, so pretty good looking chart for Santana Minerals. When did this company list? Many years ago, and the chart has been looking good since about 2022, in fact. Okay, so that's Santana Minerals coming in at number 5. Just noticed that the XGO is now up 0.72% now. Okay, coming in number 4, we have GQG. This one should be fairly quick. I am a little bit surprised the share price is down a little bit. They did release the funds under management. The share price is in a bit of fuck. I have been trading this. I have taken profits. I just don't like the chart anymore. They did release the funds under management. Not my favorite type of funds under management announcement. I do prefer Magellan Financial Group just because it's very succinct and it's easy to read. This one has a lot of commentary, a lot of tables. Well, maybe not a lot of tables. I have one table. But the first thing I noticed when I saw this was funds under management didn't increase all that much. 160.8 to 161.6. And they also mentioned there was some inflows, which might mean, and what net inflows during the third quarter of 6.2 billion, which might mean they underperformed. I have no idea. I have to have a closer look at this particular one to try to understand why the funds under management actually didn't increase all that much, even though there was $6.2 billion of inflow or net inflows during the third quarter. Anyway, the market was a little bit negative about this announcement. However, I do think there's a possibility why the share price is down is simply just sentiment, overall negative sentiment in this company, short-term negative sentiment. And you'll be able to see that just by looking at the chart. In fact, we have to look at the daily chart. Now, longer term, sentiment is still okay. So I took up a trading position at 234. This is way too late. Should have bought at about $1.70 when it actually broke out. Anyway, and then share price is a beautiful uptrend. That came to an end in August. They did release their results in the market, I think 5th of August, or was that funds under management? That could have been funds under management announcement. Let's have a look. 5th of August. Now, that's 7th of August, sorry. So why did the share price drop on the 5th of August? Down 8.8%. Company did not release anything that day. Nothing. Not sure what happened. Then they released the results on the 16th of August and nothing much happened there. In fact, the share price dropped 2.8%. Looked like the share price was trying to rally again, and then they released their results, share price dropped. And it does look like the share price wants to move into a bit of a downtrend. Now, I think there is potential the share price is oversold right now because we have seen 3 big down days in a row. And I did have my sell price at 243, but I just got in early because I just don't like the chart anymore for GQG Partners. And that's all I want to do is just trade this company. Go and hold it for the long term. Coming in at number 3, we have Pro Medicus. We did not see this company on the top gainers or top losers. Now, we should not have seen this company on the top losers. They did release a positive announcement. I'm assuming the share price is up a few percent. 1.48%. Pro Medicus signs 98 million Australian dollar million 8-year contract renewal for Mercy Health. I have a feeling if this wasn't a renewal, the share price would be up 5-10%. So another impressive announcement, but not as impressive as initial contracts. This is just a renewal. Anyway, so one of the main reasons I just want to include Pro Medicus, there wasn't many announcements today, although I did miss a few. And the other thing is Pro Medicus chart is absolutely brilliant, but I still think this company is overvalued, and I'm still thinking, should I take profits? I keep asking myself this, maybe I should just take profits. I've been actually saying that for about 6 months. And when the share price got above $100, I started saying that, well, maybe I should take profits now. Share price $100. Now it's 181. But the more it goes up, the more overvalued this company becomes, unless they really or significantly increase their profit. That's the only way they can justify this current valuation. So I've been thinking of taking profits, and I do have I wouldn't say a stop loss, but if I do see the share price fall below about $150, I might just take profits at that point. But at this stage, because my first thought when the share price got to $100 was maybe I should take profits, and I'm willing to take profits at $150 now. So I'm just going to let this ride. And when I do see a bit of weakness in the chart, that's when I might take profits. So maybe now's not the right time, but the chart just looks so, I don't know. Anyway, by the way, if I do take profits, I won't be selling my complete holding. I will maintain a permanent holding in Pro Medicus and maybe just trade around the edges of my holding, my permanent holding. Permanent's probably not the right word. It's not it's hopefully a long-term holding, but I'm not the sort of investor who would just buy and hold forever. That doesn't make sense. Anyway, so Pro Medicus coming in at number 3. Coming in number 2, West African Resources. Okay, so context here. West African Resources, they have projects mines, operational mines in Burkina Faso. Now, 2 years ago, I'm pretty sure there was a coup in Burkina Faso, and so they have the new leader, 2-year anniversary, and he mentioned something about mining and gold mining. Here we go. Burkina Faso plans to withdraw some mining permits. West Australia gold miners future in limbo. It's not really in limbo amid Burkina Faso turmoil. So these are just some comments the leader said. Not even sure what he said. So this is just risk. It's all about risk. So the market's saying, well, there's an increased risk now when it comes to this counting. Now, more than likely, the market is overreacting. And you can just see that by this West Australian article. The West Australian gold miners future in limbo. It's not really in limbo. So the share price, when it opened, because of what happened and these leaders' comments, and more than likely, there's a chance the media has overreacted to some of his comments. So the share price immediately fell on open. There was no announcement from the company. Share price immediately fell. In fact, the share price yesterday, or the previous trading day, closed at $1.67, and today opened at about $1.34. No, opened at $1.30, went to a low of $1.18. So we are talking about the share price dropping about 30 to 40% within minutes of opening, just because of some comments. The president of Burkina Faso, let's have a look. What shall we call him? I don't know his name. Unitary Republic under military junta. Don't even know what junta means. It's just a military leader. Yeah. I'm pretty sure he got into his role 2 years ago. I'm pretty sure there was a coup 2 years ago. Interim President Ibrahim Traore. Yeah, that's him. I know the face. 2022, there was a coup. Yeah, that makes sense. 2 years ago. And the share price of Burkina Faso did suffer during that coup. So let's have a look. I'll go back to September 2022. You can see the share price dropping a lot. It dropped a lot. It went from about $1.45 all the way down to below $1 during August, September of that year. So this company does have sovereign risk. And we've seen that today. The market does get a little bit nervous because of little things the government can say. And we've seen that today with Burkina Faso. Now, whether the company is now in limbo remains to be seen, but the company did release an announcement. So shares were paused at 10:40 a.m. and they released an announcement at 11:50 a.m. Burkina Faso operations update. So what did they say? And by the way, the share price did rally on the release of this particular announcement. They mentioned on 5th of October, so that was 2 days ago, the president of Burkina Faso, President Traore, spoke on Radio Burkina to commemorate 2 years in power. He spoke on several topics. So this thing on mining could have been just a throwaway line. We don't know. So he spoke about corruption, security, transport, agriculture, and mining. Importantly, he spoke about the significant progress that has been made in regaining territory lost to terrorist groups in the north and east of Burkina Faso. Wasn't there some sort of big terrorist attack there was it 2 months ago? Burkina Faso terrorist attack, yeah. 600 people died. It was Al-Qaeda linked militant group. Yeah. Anyway, so that they actually do have to deal with that sort of thing, right? Or the government has to deal with that sort of thing right now. Now, regarding mining Burkina Faso, the president reiterated the Burkina Faso Agency for the Promotion of Community Exploitations and the Society for Production and Supply of Industrial Materials is already operating gold mining operations in the country. The company, West African Resources, is not aware of any plans by the government of Burkina Faso to withdraw any of its mining permits. The president has spoken previously about taking action against miners who have not adhered to the mining code and also regulating the semi-mechanized and artisanal mining sectors. The government remains supportive of West African Resources' position in Burkina Faso, as demonstrated by recent positive interactions between the company and the government last month. So there is a chance the market is overreacting because of some throwaway comments that have no relevance to West African mining, West African resources at all. That's how the market works. They hate risk and they sell first, ask questions later. And I think that's what's happened to this company today. Now, in saying that, there is a risk here. There's a risk. We don't know what this president's going to do. So, but on the flip side, we also don't know what the Australian government's going to do. Who knows? Tomorrow, the Australian government could come out and say, well, all lithium companies now, or maybe not lithium, all iron ore companies now have to pay 95% royalty on their mining. We just don't. That could happen. We just don't know. It could happen. Chances of that happening is like 0.0001%. But again, the chances of West African Resources going bye-bye because of the government is probably pretty low as well. But there is a risk, and the market doesn't like risk. Now, in saying that, this company and other companies in West Africa do trade at a significant discount. That's the attractiveness of them. They do trade at a significant discount. And if they are successful and the government doesn't block their success, these could be significant wealth winners for shareholders who are willing to take on their risk. Doesn't mean West African Resources is that company, but added risk for West African Resources right now. And that's why the share price is down a fair bit. If we pay attention to the chart, share price has been looking really good. And this could just wash over the next few weeks. And this could be the last we heard of it. And by the way, let's have a look at the 1 minute chart. You better see a massive sell-off on open. So on open, the share price did drop 23.4%. And the low was reached in the 3rd minute of trading. Yes, the 3rd minute of trading, the share price did get to a low of $1.18. They went into trading halt. And then they came out of the trading halt at 11 a.m. and the share price increased 7.8% in that 1st minute. And the share price has been going sideways ever since. Now, what you will see is some people have gone, investors have gone and saw that the company share price is down 20%, and they're probably panicking right now. So you will see a bit of pressure on the share price because of this panicking from investors who have seen or are looking at the share price down 20%. So that will continue maybe over the next few days. But also you will see other investors going, ooh, I like the value proposition for this company moving forward. Anyway, so increased risk, but definitely not the end. The company is definitely not in limbo right now. Now on to the top stocks of the day. Rio Tinto and what was it called? Arcadium. Arcadium Lithium with a ticker code LTM. Share price for Arcadium up 47%. Rio Tinto confirms approach to Arcadium Lithium. Not sure why the share price is up 47% or $2. I don't think they mentioned any price here. I did go through this. I can't remember any price. Maybe there's just rumors of the price. So Rio Tinto confirms approach to Arcadium Lithium. And that's it. It's in the title. That's it. Approach is non-binding, and there is no certainty that any transaction will be agreed to or will proceed. That's it. Share price up 47%. This could be the market saying, we think lithium is undersold or at good value right now. Or on the flip side, this could be just another overreaction from the market. Complete opposite to West African resources. This is maybe the market getting a little bit too excited. Maybe nothing will come out of this. We don't know. I actually do want to give a bit of, I suppose, give a bit of love to Rio Tinto. I do think lithium could be near the bottom of the cycle. And what the bigger mining companies should do is they should be acquiring assets of any sort of mining company, when the underlying commodity is at the bottom of the cycle. That's exactly what mining companies should do. Mining companies typically don't do that. Typically, they get too excited when the underlying commodity is at the top of the cycle, that sort of thing. But this is exactly what Rio Tinto should do. They should be looking for distressed assets in lithium if they want to get into this space. BHP should be doing this. I think even Fortescue should be doing this, because there's probably a lot of distressed lithium assets that could be undervalued, particularly if lithium goes on a run. So let's have a look at the chart for both of these companies, because there's nothing much to talk about when it comes to the announcement itself. Rio Tinto, first of all, the share price has been on a run because of iron ore and Chinese stimulus. Now, this is the 1 minute chart. In fact, if you're just trading this, day trading, it's actually a negative chart. So that's a 1 minute chart. And you can see, just by looking at different time perspectives, based off the periods, you get whole different feelings about a chart, different thoughts about the chart. So 1 minute chart looks negative. Daily chart looks, it's all over the place. In fact, Rio Tinto's share price, the volatility recently, in my opinion, is just a bit of a turnoff. Just too much volatility for Rio Tinto and also other iron ore companies. And share price has dropped from about $130 back down to about $120. Now on to Arcadium Lithium. This could be a breakout, although it's not the sort of announcement that I would say is a breakout. So I'm looking for positive financial announcements. This is not a positive financial announcement. Share price has been a downtrend ever since Arcadium Lithium. Not sure if this is a listing or is it a merger. I can't remember. 4.88 billion. Was this a merger of two companies? Was it Galaxy and what was the other one? I forget the other one. Did they merge to become Arcadium? Maybe. I forget. Anyway, so share price has been a downtrend, and share price has popped up. I wouldn't be surprised to see the share price just drop from here. This is it. 1 day bounce in share price, and now we're going to see continual weakness in the share price moving forward, particularly if we just don't hear anything else about this potential takeover. However, maybe there could be a bidding war for Arcadium. Maybe this is the bottom for lithium. Maybe this is the catalyst. This is the sign that we have reached the bottom for lithium. And maybe whoever's buying lithium today are doing the right thing. They're getting in early. They're timing it to perfection. But I prefer just to wait, just to see if this has any legs. I suppose that's the best way to say it. Okay, so that's the top 5 stocks of the day. Just going to focus on a few of your comments. No charts today. Matthew Young, thoughts on the dip. John's Lyng Group, thoughts on the dip. I was a little bit disappointed with their results. I did expect a little bit better growth, but if we have some really bad weather, and I noticed there's another hurricane heading towards the western coast of Tampa. What's it called? Hurricane starts with M. Mitch, Michael, Maria. Hurricane Milton. So Florida braces for Hurricane Milton, and does look like it's heading towards Tampa Bay. There is potential that It could be a category 4, possibly even a category 5, before it weakens a little bit as it approaches the coast. Anyway, it's developing in a very unusual area. I think only 3 hurricanes in the past have developed in that area. In fact, I'll just show you the map, National Hurricane Center. This is a bit of a tangent. No, hurricane, not New Hope. It's developed in an unusual area. So if you click on here and look at the map, so I don't know what is, that's a Yucatan, somewhere in that area. I'm not sure what this bay is called, but not often have hurricanes developed in that little bay area. Peninsula, I don't know what it's called. Let's have a look what that's called. Mexico. Oh, doing a bit of learning today. So the whole area is Gulf of Mexico, but I just want to know what this area is called. And of course, nothing's there. Whatever area this is. Anyway, I've read that only 3 instances in the past, say 130 years or so, hurricanes have developed here. And one of them was Galveston, 1904, which destroyed Galveston. 1901, Hurricane Galveston. 1900, wow, very close. Yeah. There was a really good book about this. Okay, I'm getting really off topic now. The whole reason I started talking about that was I think John Lyng's group will be benefiting from any sort of significant increase in severe weather, and the share price did drop because very little growth and very little expected growth in the next year. They have expanded into United States, which can always be problematic for companies, and the share price just completely nosedived when they released the results. And just by looking at the chart, I do have a position in this company, and if I do see any value, I would be buying more shares, but I don't see any value right now. The PE ratio is like 20. Is it 20? Yeah, 20.7. And the chart just doesn't look positive at the moment. There's no bounce, hasn't been a bounce. Nothing. I have nothing for this company right now. If anything, if I was not a holder, I would not even be looking at John's Lyng Group right now. There's just too many questions I have, and the chart does not look positive. So that's me. If I was not a holder, as a holder, I would keep as close, not a close eye, but I will keep an eye on the chart. And if I do see the share price starting to turn up, I will add to my position, take a trading position in the company. Fishball took a position in COB, Cobra. Chart looks like it's about to turn. We'll add to my position if it breaks about or out of 10 cents. Let's have a look at Cobra, COB. Cobra? Oh, Cobalt. I think Cobra is CBO. No, CBE. Cobra is CBE. Yeah, CBE. There we go. CBE. Cobalt. Okay, let's have a look at Cobalt. Okay, yeah, it's a little bit too early for me at this point in time. Share price has been on a nice run the last 2 weeks, but it's a little bit too early for me. I wouldn't call it just yet because we did see a nice little run back in this time last year almost. Share price went from 22 cents up to 32 cents and then just fizzled out. So for me, it's just not there yet. But we're all different. We're all different. We have different rules. Well, we should all have different rules, how we play this. And that's why some traders might get in a little bit earlier than others. So I like a little bit more confirmation about Cobalt Blue right now. I still think it's in a downtrend. And even though the share price has gone on a little bit of a rally, some nice volume coming in as well, I'm just not there at this point in time. I need to see a little bit more proof. But it's about to turn. I've done this before. When I've saw a chart just about to turn or in the first throes of turning, I have taken a position. In fact, quite a few of my holdings right now are at that point. It looks like they're about to turn. Anyway, so I can't blame you. I think, yeah. Oh, thank you, Fishball. Right, he's got another comment here, Fishball. To me, it seems like after a few days of gains from HSI, institutional money pouring in, stockbrokers who are underperforming in the last 2 years sees a few options. One, miss this run up on the HSI. I'm assuming you mean the Hang Seng, and be more underperforming than losses or then loses their job. Get in now and join the bull, and even if it does pull back, then so does everyone else. So your job may still be safe. with this stimulus, there is definitely more upside than downside. I understand exactly what you're talking about. Sort of like FOMO, but you just know that if it fizzles out, then it fizzles out for everyone else. But if it keeps on going up, then you've done your job. Because if you haven't had a position, it keeps on going up, keeps on rallying, then you're going to underperform everyone else. Sort of like Nvidia. So most of the best performers or in institutions, fund managers in the past few years have been significantly long on Nvidia. And anyone who didn't have Nvidia stocks or holdings, they underperform. So there is a problem because they are judged on the short-term performance, and it shouldn't be like that. It should be judged on your longer-term performance, not on your short-term performance. And that means they're more likely to make short-term decisions that are only going to affect them for the short term. And that could be fairly negative for the medium to long-term performance of the fund. That's why I don't like fund managers. And one of the reasons I don't like fund managers, and one of the reasons I would never become a fund manager. There's just too much focus on that short-term performance. And they're judged on that short-term performance as well. James Lee says, I think it's time for you to make a video on China's stimulus package. HSI look bullish for you. I know you have been bearish on the HSI for a while. Every country hit all-time high after these easy money comes in the market. Do you think it will be the same for the HSI? Everyone likes a bit of gamble, especially the Chinese. So definitely been bearish on the HSI because it was in a downtrend. But then the downtrend has come to an end. So, yeah, I think it's pretty obvious. It's been a downtrend. And all of a sudden, downtrend has come to an end. A lot of volume as well. So obviously, the Chinese are getting excited about this stimulus. They're buying in. Now, this does look like a shift in sentiment and a shift in trend. I will say that. But it has rallied really hard. So I wouldn't be surprised to see a bit of a dip. But I definitely am more bullish with the Hang Seng right now. Definitely more bullish. This is exactly what you should be looking for. And this could be the start of a new bull run when it comes to the Hang Seng. It could be, without doubt. It could be. And the question is, how do you play it? That's the other question. So I was looking at buying some Alibaba a few months ago, and or any of those sort of companies. Alibaba, I think it's Alibaba. What is it? Baba, that's it. And you just see how this is sort of this chart. It's a beautiful looking chart. This mirrors a Hang Seng. I think that, in my opinion, this could be the way to play it. Say Alibaba or one of those companies. But look at how much share price of this company has dropped over the past few years, from 320 down to 114. So there's still a lot of upside left for Alibaba. In fact, the last time I looked at, it says the P ratio is 29.49, but that's on lower profit, I'm assuming. Let's have a look at the yearly profit. Yeah, so the profit has dropped the last few years, even though revenue is still climbing. So if they get their profit back up to what it was a few years ago, this company would be trading on a P ratio of almost 14, 15. Yeah. So I think there's definitely possible value in Alibaba. And the stimulus probably should help some buying as well, some retail spending. Anyway, Anderson says, night owl here. We'll settle this another time. Well, I was a night owl once. Now I'm a morning bird, and I have it no other way. I work with night owls. Everyone is different, aren't they? And there's King Consumer. Sensei says, Kneppy putting in the work even on a Sunday, the way it should be. Weekends are overrated. Better work, study all 7 days for several hours a day, for 11, 12 hours a week, 11 to 12 hours weeks straight, then take a full 1-2 week break, then repeat that cycle throughout the calendar year. There is a response. Just go like that. There is response from your Freeman. Work, break, intervals, ideals vary person to person. Now, I'm going to be fairly blunt. I'll be fairly honest with you. I don't have weekends. I don't consider Saturday and Sunday to be a weekend for me because I could be working Saturdays, Sundays. In fact, I did that this week. So I worked Saturday and I'm working Sunday night and then work tonight. SIS, I'm working a public holiday. More pay. So I never consider Saturdays and Sundays to be weekends for me. And better work. I suppose I work. Technically, I don't work every day, but I do work for myself every day. So I do, yeah, I work every single day. I work for the government in my paid job. I do this YouTube channel, and I also do other work for myself. So I'm always working. We should always be working, doing stuff, improving ourselves, that sort of thing. And your Freeman's right. Very person to person. For instance, I love 12-hour shifts at work. I love them. In fact, if I could work a 16-hour shift, I would work a 16-hour shift. If I could work a 24-hour shift, I would work a 24-hour shift because when I'm in the work mindset, I want to be in that mindset for a long period of time because my mindsets change. Work for 12 hours, have that mindset. I just hate 8-hour work days because you have to change your mindset continually during the day. That's just me. I'm different. And James Dean died in 1955, said APA dropped immediately after I bought some. Let's have no, we'll have a quick look at APA. Why not? Yeah, I'm not keen at all at this point, just this point for APA Group. I think I've already mentioned that. I've been looking at this chart frequently lately. I don't understand why the share price is in a downtrend because this is sort of like a bond proxy. Anyway, I don't know. David Giblett would love to hear your thoughts on Megaport. Seems to have found a low support. Keep up the good work. Thank you. And your Freeman is Megaport's his largest holding right now. Okay, let's have a look at Megaport. Now, they did release their financial results and the market hated it. I think it was more the outlook the market didn't like, if I remember correctly. I have traded Megaport in the past, no longer trading it. And the chart, yeah, I personally, now there could be support about $7. So is $7 a support level for this company? Yeah, around this zone is an important level. If we have a look at the weekly chart, so yeah, sort of around this level. That was the lows, not the lows, but that's when the share price ripped higher back in July 2023. The share price was around $7. But I wouldn't say there's any significant support level at this price. But just based off the trade in the last few weeks, there is a possibility that $7 possibly, and this is just based off probability, could be a floor. Now, I'm not completely convinced about that. I would love to see a bit of volume coming in, telling me that there are institutions, fund managers interested in this company at these prices. Not really seeing it. And we haven't seen any significant bounce. That also concerns me. So I wouldn't be surprised to see the share price fall from here, but I wouldn't be surprised to see the share price rally. And it all depends on any sort of trading update the company gives. A lot of volatility in Megaport. But yeah, I couldn't blame you either way when it comes to your opinion on Megaport right now. But the chart does look negative. When you look at it, share price is in a downtrend, but I just want to see a bit of a bounce. Would have loved to see the bounce after they did release the results, but share price just kept on falling, which every single time I see that happening, that's negative signal. But probably the question is there a floor in Megaport share price right now? And is that floor $7? What you could do is take a position, and if it falls through $7, just maybe sell out of your position. I don't know. Anyway. So thank you for that about Megaport. Marianne Delernia. Thanks, Michael. How do you monitor your performance on an income basis and portfolio performance during a month year? Do you spreadsheet it for yourself? Just have your statements. Okay, so I used to spreadsheet it. Now I use ShareSite. So there's a few online platforms you can use. ShareSite Australia. Track your shares, trades, dividends, DRPs, corporate actions, CGT, and more with ShareSite. So you do have to pay. Well, there's a free version, but you probably want to pay the paid version. And there's also Navexa. Maybe there's more that I just don't know about. You can see Navexa versus ShareSite. So there's also Navexa, Portfolio Tracker. Now, the question is, do you want to pay to do this, or you just want to do it yourself? It's up to you. That's what I do. I use ShareSite. Yeah, no complaints with ShareSite. It's just the first one I found. I found ShareSite before Navexa and have no reason to try Navexa. And maybe I should do a standalone video on books. I have answered questions on that, so maybe I should do a standalone video. Big Boy Baby says, I'm Chinese. The thesis is wrong for Treasury wines. As the Chinese middle class is growing, they have less taste for Aussie Penfolds wine. It no longer has the status it had 10 years ago as they had become wealthier. Have I answered this before? I don't think so. Okay. This is really interesting. So this is on the back of Scott Phillips saying he bought Treasury wines because he thought because of the burgeoning, the increasing middle class in China, they'll be buying more wine, including Australian wine. And it's a really interesting take because he's making assumptions and he's speculating, and that can be fraught with danger because you're speculating on a culture you don't know much about. So it's really interesting to see a bit of insight from someone who is Chinese. And he's saying that thesis is wrong. Scott Phillips's thesis is wrong for Treasury wines. As the Chinese middle class is growing, they have less taste for Aussie Penfolds wine. It no longer has a status here 10 years ago as they become wealthier. I still like Penfolds wine if they did spin that off, not because of China, but because of Penfolds wine. It's renowned around the world and it has a name, it has a brand. There is that moat when it comes to Penfolds wine. The rest of Treasury wines I have no interest in. But anyway, yeah, I would not be buying Treasury wines just because of China. That would be a mistake, in my opinion. Okay, and the last one from Ajan Jan. Hi, Kneppy. Are you more inclined to keep shares for a long period, even when they are doing poorly? At what percentage would you feel the need to cut your losses? I can definitely envisage me changing the way I've done things. So I used to do this in the past. In fact, depending on the quality state of the company, if it was a high quality company, the share price has pulled back significantly, I would be more likely to buy more shares because it's better value. But if it's a low quality company, I would prefer to trade it. And that means not holding it when the share price is in a down period. So protecting my capital. The reason I want to do that is because a low quality company could fall a lot. In fact, a low quality company could fall to zero. A high quality company could fall to zero, but it's much less likely. So I do want to protect my capital in those sort of situations. And I think moving forward, I'm going to be much less inclined to be holding companies whose chart looks pretty negative, even when I'm talking about high quality companies. So that's not something I'm going to change when it comes to my own investing and trading philosophy. So it all depends on the individual company. So the answer to this question, it all depends. At what percentage would you feel the need to cut your losses? I have no percentage. There is no percentage. Again, it's an individual or case by case thing, depending on the individual company. For instance, with QGQ, I took profits at 8%. Yeah, just looked at the chart and went, I'm not feeling it, the chart. So it's just a case by case, individual basis when I will cut losses. But typically, I'm more inclined to cut my losses at no greater than 10%. Now, that's my trading philosophy right now. Losses 10%, keep your losses small, ride your winners. If you do that, keep your losses small, ride your winners, you're going to have long-term success. I believe that more and more every single day, and I am transitioning to doing that for all my companies I own. Anyway, thank you for that question. Hopefully I've answered it, but I'm getting to almost 1 hour long for this particular video, and the market is closed because it is 3:22 p.m. in Brisbane. Now, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.